Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own economic financial condition. Please pause the video, read this disclosure. No new position update for me, no new long swings. Guess I should be having some short swings maybe, but we'll see. So, markets, Powell coming in hot. Not like crazy hot, but certainly shook the markets today. So, opened up pretty flat all day into the Fed, which, more or less kind of expect that. Nothing really big into the Fed. And we've been flat for days coming into the Fed, so why expect anything too different coming into it? So we come on. This was really surprising to me. This move right here. So we hiked by 75, which was fully priced in. And some people were expecting 100. I don't know if people were disappointed that we didn't get 100 because they think Powell's not being aggressive enough. Perhaps that, perhaps just robots. But so big down move off the 75 rate hike here at 2. And we did a pretty good job saying, to care, like, pretty much like don't short, be careful, don't panic, don't make any big moves right at 2 o'clock. 2 o'clock is usually when the rate hike comes out, the algos react to that, and the real move comes during/after Powell speaks. So big downtick right at 2 o'clock there. We're saying be careful, don't panic. And then 2:30, Powell starts talking right here at the beginning of this bar. So this bar ended up closing well, but down here right around 381, 382-ish or so when Powell begins speaking, Powell says a couple key one-liners that my head's like so crazy. I can't even remember the exact key lines that he said. Something about, look for slower rate hikes and, we're still going to be aggressive and get the job done, but maybe in the future we won't be as aggressive. Something along those lines. But we had our key levels. We had our key levels to pay attention to. And we said it in the afternoon meeting yesterday, and we were saying them all day today. SPY 384 being the big one. Talked about it for a couple days now. SPY 384 has literally been a key level all week. Monday, actually on Friday, on Monday, on Tuesday, yesterday, and then today. So Powell began talking, said a couple key one-liners. Who cares what he said? What I cared about was the price action, which was ripping up to/through the key level. And some of us caught some nice buys through, pick your name. SPY was 384, Q's was 288. I think Josh did that one. Tesla 310 worked. Netflix 244 worked. I don't know, pick literally any name. Probably the best one was this Nvidia through 135, 136 day high, which was the strongest stock intraday today. So relative strength, go with your relative strength if you're going up, go with your relative weakness if you're going down. So that Tesla back up through that day high as well. Just some nice momentum buys there. And then the party did not end there. 388 SPY, which pretty much equates to 3,900 on SPX on futures, roughly around there. 3,900 SPX. 388 SPY, a key level, which 3,900 is obviously the real big key level. We had grinded up to it this one day, but then gapped down the next day. Tailed off 388, and then you can see these 1, 2, 3 tails. These are all 5-minute bars. So that's like 15 minutes or so of bumping into 388, can't, all this volume, all this craziness, but can't clear 388 for a solid, 15 minutes or so. And we come back down off of 388, nothing too much to worry about until we lose our key levels. And what happens? SPY comes all the way back down, blips 384 real quick, and then loses 384. So If you're not, if you're long through those key levels, you got to get back out when the key levels are lost, and maybe even look the other side. I got back out. I didn't look at the other side, unfortunately, but back down through 384, and then just a total and utter complete destruction this afternoon. Back through, down through 380, closing on lows to give us a pretty terrible looking daily chart here. This 380 short, it's a shame that they took us down this far today. If we were like, 382 at the close, at 380 short was setting up real nice for tomorrow. But they spent no time waiting. We're down. We're actually down after hours too, another like dollar or so. We closed roughly mid 377s and down another dollar after hours. So where does that leave us going forward? Well, we have bigger picture, we've spoken about a few worrisome, troubling signs out there that point to a very possible new low in the market, maybe even as soon as next month. One big one has been the 10-year TNX, which it was interesting to see. Where's my line? There it is. It was interesting to see rates actually come down post the Fed, even though the market got destroyed. Rates ripped and then came back down in a pretty hard and big way. But even despite this rate down move this afternoon, TNX, the 10-year, still above that year high that some people are arguing if this could make a new year high, which it did, and is still above there, that 3.5 basically. That markets should make a new low, and the bond market does lead. The bond market is a bigger, more important market than the equity market. And then some other signs are just the leaders that are making lows and not giving relative strength and not holding up. Meta, which you can put a little asterisk to that because this company changed with the whole metaverse spending, but Meta has made New Year lows. Nvidia made New Year lows on all that bad news. And then even more interesting, Microsoft has also made New Year lows, and Google has made New Year lows. Apple hasn't done it yet. There's still some room left for Apple. Amazon hasn't done it yet. Definitely still some room for Amazon, but not great to see a Microsoft, and a Google making New Year lows. So that's the bigger picture. The bigger picture looks pretty bad here, and the smaller picture looks pretty bad as well. Tomorrow's going to be tricky because this 380 short is gone already, right? So, we'll see how much they gap us down. It seems pretty obvious that they should gap us down. I don't see how they wouldn't, but I'm not going short overnight betting on that. That's a little bit gambly-ish. But still, this definitely looks like we should see downside follow through. And we said that yesterday in the afternoon meeting as well. What's going to happen with the Fed, I don't know, but technically we are in a downtrend below moving averages that are sloped down. Technically this should resolve to the downside, but the Fed can change that. And if the Fed is going to change that, we would be above 390, closing at like 395 today. Or at least above 390. So, what to look for next? 370, I guess 3750 actually is a level. Let me just see if I can pull up this futures chart. No, it's not going to work. Well, how about I pull up SPX? So, next levels, 3850 was the key level that was lost today. So 3,800 was also lost today. So what's next? 3,750. 3,750 is a level. Not really 3,700 though. Just 3,650. We pretty much only have two levels of support: 3,750, and then year lows. I can't really see 3,700 being a level here. I do see 3,750 though. So 37.50, 36.50, and then New Year lows. I'm definitely not saying year lows are coming tomorrow and to go all in short tomorrow or anything like that. So I guess what to look for tomorrow, 375 and then 370 for SPY. I don't know. We're gonna have, I think it's gonna be like a play for like a day after earnings type because again, we're probably gonna be opening too far away from 380 to be shorting versus 380, but it's certainly not impossible for us to gap and just go down again tomorrow. So like we handled this CPI day, we're gonna let it open. We're gonna let that opening range play out, and then if it goes through the lows, you can look to be short, even if that 5-minute ADMA is not quite caught up yet. The 5-minute ADMA did not catch up on this day. It usually doesn't catch up fully when you get like those big gap and go downside days. So the setup was going to be probably a bit tricky tomorrow. We'll see how much they gap us down, but things are not looking good out there. Now that I've done all that fear mongering, that being said, if we get back above 380, the picture starts to change. If we get back above 30, and that's what makes it hard on the guys that like go on TV. Like if I went on TV this afternoon and said how bad things look, you got to say, but if we're back above 3,800, you got to change because things can flip. So we do look bad, but if we get back above 380, if we get back above 3,800, there's squeeze potential. There's definitely always some squeeze potential in this bearish market. So we look terrible, but if we reclaim key levels, then it's at least a start. So until we get back above 380, we're looking pretty awful. But if we get back above 380, then the story starts to change a little bit. And I think that's all I really got. We had a few. I don't even want to go over too many key plays this morning. What do we have? My Google Chrome is like not working. Trade of the day for us was GIS, which, wow, that held up. That held up. GIS we looked at off earnings. Came out with earnings. Numbers were decent. They raised guidance. You're raising guidance in this market. Kudos to you. And it was simply just a mix of 78 and buying through the high. So we looked at the 78 level, 77 we said was support, but 78 was really like the key level to break there. This GIS, you let it open, you let it shake around, let it give you some sort of like real defined range where it makes a high, it makes a low, however long that takes. Sometimes it can be really quick. Sometimes it can be a minute, sometimes it can be 5 minutes, but you got to really let it make a high, let it make a low, and then when it goes back somewhere in the middle, and then you have your range. And then this broke 78, broke up through highs. That was fantastic. I think a good amount of you guys caught that, so good job there. And other than that, just the key levels, which if you're disciplined, you definitely could have made money in this. If you're not as disciplined and didn't respect the levels, didn't stop back out or something like that, you definitely could have gotten hurt. But I think most of you guys did okay today. And that's all I really got to talk about. This market looks terrible. It looks like we are going to go to New Year lows, but we'll see. We'll see. 370 could hold. Either 370 could hold, or we could go back above 380. So we'll see what happens, but looks pretty bad out there. And that's all I got to talk about. So happy to answer any questions, talk about any trades or anything like that. I'm going to try to load YouTube, but my Google Chrome is not responding to me. Oh, there we go. That's better. Let me look in the VTF first. See you guys talking with Bill about Gamma and Delta and all that fun stuff. Yes, I did, Jerry. Said turn those buy machines back on. Chingus, what are your thoughts on trade and Qs yesterday at 10:45? Qs. Sorry, my Google Chrome keeps freezing and unfreezing. I'm just making sure I'm not going to lose you guys. Okay, back now. Qs yesterday at 10:45 inside 5. Qs were stronger. Apple and Tesla were strong. Wait, let me read this. What are your thoughts on a trade in Qs yesterday at 10:45? You're talking about yesterday, this inside 5. Apple and Tesla were strong. Target gap fill. SPY and IWM were going sideways. New VIX was breaking lows. I like this inside 5 because it lines up with this day high 289 level. So it's not just like a totally random inside 5, but it's a inside 5 in front of what is clearly a level. Tail, fail, tail, tail, fail, tail, fail. So clearly a level there. Just, you can see it by how many times it failed before it finally went through. And then your target, you're saying would be a gap fill. Yeah, I like that trade. I like everything about that trade. I like everything about it. Doesn't mean it's gonna work every time, obviously, but I like it. Especially because again, it's not just like a random inside 5, but it's an inside 5 into a level that has been consistently failing all day. But now that the more times you test resistance, the more likely it's going to break. You're consolidating in front of the level. You tailed off the level, but then you're consolidating instead of failing like you've done every time. That's a great sign. So that should be your thought process when you're kind of like seeing that in real time. And yeah, I like that trade. Yeah, Q's getting crushed in the after hours as well. Also, what are your thoughts on a Lebu trade today? That's 1450 inside 5. Prices were holding above the 14-minute highs, and it was flagging. 1450. Doesn't looks like this. Oh wait, sorry, this inside 5. So I honestly, I gotta say that I don't like that trade because although everything about it is technically good, you missed what the real trade is, and the real trade was buying through key levels on the up move on the Fed. So what time did SPY go through 384, which was when everything really broke up? That was at a little bit after 230 on the 230 bar. So on that bar, maybe you could have been buying XBI back through 81, but if you weren't doing 81, even just through the high, so I mean technically everything about that trade is okay, but it's late. It's a second in line. I can't think of like the right phrase, but like a second in line type of buy. Like the real buy was somewhere in here, and you should have sold some already. So although everything about it technically is okay, I don't like it because you know it makes me feel like you missed what the right. And I'm not saying like you did or didn't do this, but if you miss the right trade, it just kind of feels like a FOMO. Kind of feels like a FOMO trade to me. If you miss the trade, just wait for a better setup, which I know this is a setup, but you missed the original trade. So technically it's okay. Technically you could try it. You definitely should risk less off this second tier type trade than you should on, the original, the real trade. So, it's okay if you risk less there and know and understand that it's kind of like a second tier type trade because you missed the first buy. I hope that makes sense. If year lows break, what's the next level? Good question. My well, so technically there really is none. We have this trend line from pretty much every year low bounce, pretty perfectly called these bounces, and then the real year low, we lost it, but then reclaimed it. So technically, that trend line looks around 3,400. So 3,400, personally, fundamentally, I think under third. If you want to do like a, which I've been like very patient and I've missed some of these up moves this market, but I don't think the market ever got low enough, and it didn't because we never really capitulated. And I'm not necessarily saying I'm looking for capitulation, but the market never got cheap enough, in my opinion, to like buy and really put away. I think, and whatever. I'm not like a super fundamental guy, but I think you could like for actually buying and putting stuff away in like retirement, long term, whatever. I think the first area to do that to like nibble would be under 3,500 into 3,400, which lines up with this, and then 33, so like 35, 33, and then obviously under 3,000. I'm definitely not saying we're going to go to 3,000 and under, but don't think that's impossible. Nothing is impossible. But if I really had to give you a level, and actually this 3,400 fairly lines up with this kind of like test of the COVID highs breakout. So 3,400 is a level, 3,200 is a level, 3,500 is a bit of a psychological level. But yeah, I think if year lows break, the next better good buy would be under 3,500 into 3,400, and we'll see what extension looks like when we if we get to there. It's definitely not. It's definitely possible. Anything's possible. It's possible that we don't make a new low on the year. It certainly technically looks like we're going to, and if we're not going to, again, it's not like the market's just going to magically gap up at 4,000 one day. Like if we're going to hold these year lows, it's going to be a process of either getting like literally extending under 3,700 tomorrow and that being enough for us to bounce back through 3,700, or something like we go towards 3,700, don't break year lows, chop and base out again, kind of like we did over here, and then round back up, but it's going to be a bit of a process. So yeah, that's kind of where my head's at with all that. Can I get your thoughts on the Tesla short at 1525-ish through VWAP? I think that I don't think I ever have, and I wouldn't really go do something like above like short through the VWAP. I very much get why that makes sense to do that. So like yes, this was a good trade, but personally I think just levels are like really important in my opinion, and it really helps you keep things simple. Whereas shorting through a VWAP is similar but different to just shorting through a moving average. When a moving average, I don't know, you don't really want to do stuff like that. It really should be based on levels, in my opinion. Not to say I'm right and you're wrong, but just be careful because I mean, look at like shorting through VWAP here. You should have been buying VWAP, right? So I think levels is just, levels and pivots are important. So I think that's a good trade, but I don't think it's a good trade because it went through VWAP. I think it's a good trade because it went through this 308 level, which this 308 was like SPY 384. A lot of these names had a downtick, and this is like the same thing, similar but different to trading your earnings names the day after earnings and letting a range build. Like, you don't react right away, you let the range build, and then however it breaks, however it breaks. A lot of these names today, I guess this can be part of you guys' homework, going back and studying how you could have captured some of this if you didn't. A lot of these names today had a downtick at 2, a move back up when we were saying this is kind of dumb. Like, I don't know why these algos are freaking out so bad about that. But, just be careful. Wait for Powell to talk. Wait for Powell to talk. Wait for Powell to talk. A lot of these names made these, like, you get this down move and then you get this range where you're waiting for the real event, which is Powell talking, and then however he talks, it's going to break those ranges. So that SPY level was 384, that Tesla level was 308. So although you would have gotten a better price at 309, I also think you could, 310 was a level. I think you could have shorted Tesla back down through 310. And if you wanted better confirmation, you could have shorted it down through 308. So those are my comments on the trade, which is, it's a good trade. Like, I like, that trade worked and it was a good trade, but just careful, like, shorting through a VWAP. Because sometimes you perfectly hold a VWAP, sometimes you tail and then back above. Just like levels, you don't hold levels to the penny either. But, I think that's how you should have done it. Yeah, hope that kind of makes sense. You got impatient and went a bit early. Yeah, I mean, it's fine to anticipate, too. I mean, 310's a level, too, so if you're anticipating 308 breaking, 310 would be your stop for that anticipation, but it's not a bad trade or anything, for sure. I just don't want you to get, like, caught up with, trying to trade VWAP above or below VWAP to the penny, because, you got to give it a little bit more room. Continuation trade versus initial. Rich N, I can't tell if you're asking. I think you're just helping out. Oh, yeah. Yeah, for sure. Actually, that makes sense. Yeah, exactly. So what Chinggis had asked, his trade would have been a add trade continuation trade as opposed to like the initial trade. This AM, like with GS, but not specific to GS, you mentioned establishing a trading range at the open, and then you bought through the high of that range. Just wondering if you could explain again your thoughts. What is the best time / situation to utilize and when to avoid? And then you bought through. Well, so you don't do that every day with everything you do. I mean, it's good with earnings or just, of basically like fundamental events, I guess, when a name is trading off of a fundamental event and not just like with the market. So GIS was nice because we had a level as well as the day high, so there was both there. But I guess so. To answer your question, the best time to do that would be to do it on fundamental events, which, the market, we were kind of saying, like, SPY has earnings tomorrow, right? Like, this Fed move was a fundamental event for the market. So, you let your ranges build out, and then you play them. But when to avoid, when you don't have a fundamental event. And explaining my thoughts are just, when you have a major fundamental event, that's enough for like big money to, big money that hasn't been participating and waiting for a fundamental event to happen, that big money should then come in and participate now that the event's out of the way and they have more clarification on whatever it is they were waiting for clarification for. So therefore, you don't have to have a trend when big money comes in, but like when you do get real trends, like all day trends, it's because of big money. It's not because of, someone on Robinhood stepping the bid up with their one share buy or whatever, right? Like it's big money that makes a real trend happen all day, if not for multiple days. So that's why it's like it's easier and makes more sense to let a range play out and then buy through the high or short through the low, because you're looking for a trend. It's definitely not going to be perfect like that GIS was every time, but that's what you're really looking for. Is big money gonna sell GIS today, or is big money gonna buy GIS today? They bought. You had some fighting in the middle off the open, but in general, big money was buying GIS today. So I hope that makes sense, Bandit. But yeah, for like fundamental events, not just any kind of random. Which I mean, even like I guess like an upgrade or something could kind of be a fundamental event, but that you can usually look for levels as well. But I say it too, and then just like to go on a little bit more on that too. Yeah, definitely not just any gap, because it's like a fundamental event, and we've talked about it with earnings before. Like big money is going to participate that wasn't participating before. The flow of money into or out of that name is going to be much greater and different than it was in prior days before, and that's why a FedEx can have the biggest gap down it's like ever had in its history or whatever, and then not just have like a huge green candle to correct the extension or something like that, because the money is, it's different this day because of a fundamental event. So you could have, that's actually not a great example, but you could have like I don't know, like the new core, guidance downgrade, or the Ford, where if there was no fundamental different news, new on a day one, day two, a big gap, a gap down into 130 support, that should be a buy. But it's different because of the fundamental news. So you kind of have to let a range like play out and build that range, because that day of money flow is different than all of the other days because something changed. So I hope that helps a little bit. It makes more sense. Let me just go and check up on YouTube. And Justin on YouTube, I want to send my scanner to alert me of stocks that are doing Niners. I think the mark is similar to VIX because volatility of that's VVIX is volatility of volatility. No, I mean, we talked about that yesterday. A niner doesn't necessarily mean a change of direction, but it's a good spot to possibly look for that possibility. But a niner doesn't mean a change in direction, just like extension doesn't mean a change in direction, because you can correct sideways, right? Like you can correct sideways. So I like your idea of building a scanner that shows you Niners, but you still gotta figure out your other layers of probability, because you could have a Niner on a 5 minute, but that 5 minute chart could be about to break out of a daily level. So that Niner on the 5 minute isn't gonna work because the daily's different. So you got to look at all your time frames and evaluate, but if it was as simple as every time a niner comes up and the direction changes, it just wouldn't be that simple, because the strategy would be ruined because everyone would pile into it, and then that's when strategies get ruined and you gotta adjust to the markets. But I do like your idea of the scanner. Just don't ever overly rely on any technical indicator. If you're gonna over rely on anything, just over rely on key levels. Any other questions, or is everyone a little tired like me? I'm definitely wiped out after that afternoon. Cool. All right. Well, Powell came. Powell conquered. Terrible day for the markets. I think most of us did okay today, at least, so we're doing a good job in here, but terrible day for the markets. These charts look bad. These markets look bad. If we get back above 380, they won't look as bad. But if we don't get back above 380, not looking so good. So we'll see how hard they gap us down. Hopefully it's not too much. Otherwise, we might have to try buying tomorrow morning if the gap down's too much. But we'll see how they gap us, and we'll go from there tomorrow. Have a good night, everybody.